Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Monday, August 27th, 2007, and the market has closed. We've got the spiders closed down $1.57 today. That's a little bit more than 1% loss. And we've still got a declining 50-day moving average, so overall I'm still very suspicious of this market. And then today we didn't make we actually tied Friday's high, but we did make a higher low in here. Still a lot of mixed signals with that declining 50-day moving average, but we are in an area where this market, you would think, would find some resistance. It doesn't mean it will, but it's definitely in an area with a potential for resistance with that declining 50-day moving average and the prior support in this area up near about 148.5. If you look at the 10-minute time frame here, and just going from what's the most recent action, relevant action, when we take this out to draw our trend line, what we want to do is capture the essence of the trend. And I think this is the proper place to draw that trend line from, was the August 17th low. You can see that late in the day it did breach that trend line. Now, breaking a trend line doesn't mean the market is going to reverse, but it is often a very early warning that the market could potentially be transitioning from a short-term uptrend to at least a neutral to declining short-term trend. So you see that we do have a lower high here, and actually late in the day we confirmed that lower high with a lower low as it broke down right at the end of the day. Now what I'd love to see would be move back up to about 147.40 or so, and then another failure of that 147 before I would consider really getting short. However, on the intermediate term time frame, bullishly, we have a rising 5-day moving average. It might lend a little bit more support for, time-wise, maybe another day or so before this market does begin a more meaningful pullback once again. But I think we can't force our opinions on the market, but it just seems like this market recovered so quickly and came up as high as it did so fast that it just seems due for a pullback. And maybe not necessarily a test of these lows, but maybe we could put some Fibonacci on this recent move and go from these lows to, let's just call Friday's high. And I think a retest of the 38% retracement, even 50% retracement down at 144, 142.80 or so. That to me seems realistic, but the evidence isn't there yet. What I'd like to see is this 5-day moving average to start to flatten out, and then we get that series of lower highs and lower lows. Then I think it would be good for a short for at least a few days, if not longer. We are in a primary downtrend with a declining 50-day moving average, so it's tough to trust these rallies. And again, some of the sharpest rallies do tend to occur in downtrending markets. If we take a look at the semiconductors, I was a little bit optimistic about these on Friday because I thought that we had bullishly taken out that resistance that I had perceived at 37 to 37.50, and you can see that's where the 37.50 level was taken out. But from failed moves often come fast moves, so we have to be pretty much, I think, on high alert because this move seems to have failed now. Looking at a 10-minute time frame, you can see that we have a lower high and a lower low in here. You can see that this trend line is broken as well, and it looks like that 5-day moving average is flattening out. Perhaps a rally up to 37.30 or so once again, and then a breakdown below 37.10. I think that would be a pretty good opportunity for a low risk short sale in these semiconductors. So a little bit of strength first and then see it break to another lower low. I think that could be a low risk proposition on the short side, because you could put your stop right up, even above this level, or if it got up to 37.30 and then broke down, you could put your stop at $37.32 and risk maybe 25 cents on a short sale. But anyways, the semiconductors do look like they're getting ready to transition lower once again here. The IWM Russell 2000, again, just going to point out the continued resistance up that 200-day moving average. And looking at a shorter term time frame, you can see that here's where that resistance is, up near that 80.10, 80.20 level that we've been watching. The market seems to be drifting away from that level with lower highs, and now it's just kind of got some support, it looks like, at about $78.25. I think breaking below this support in here could lead to a quick little panic. Maybe again not a retest of those lows, but perhaps it could bring it down towards that 10 and 20-day moving average near about $78 a share. So it's not that far away, but overall we do have a declining 50-day moving average. So these consolidations will tend to be resolved in the direction of the primary trend, which is lower. So I wouldn't expect that 78 to be a strong level of support just because we've got a 10 and 20-day moving average there. But perhaps we could take a look at Fibonacci here as well and anticipate maybe a 38% retracement, bringing it down towards about 77.5, or a 50% retracement down near about $76.70. Either way, be very careful here. It looks like there's higher risk in the market at the beginning of this week than we've seen over the last couple of weeks, as price is starting to confirm what a lot of people have been looking for. A lot of people have been looking for a place to get short in here, but it continues to march higher. The NASDAQ 100, looking at the 10-minute time frame, I had drawn this in earlier, I guess, but that trend line, we've got a strong uptrend line here from the August 17th low. And again, I'm not counting this because it doesn't, to draw a trend line off here doesn't make sense. It's going to be broken anywhere you draw it, basically, and you can't draw it like that. But this captures the essence of the trend. Now we've had that fourth test. A lot of times after the fourth test of a trend line, the market will fail to hold. We do have that trend line break and a lower high, but we've got a rising 5-day moving average. So that tells me that it looks like there's early signs that the short-term trend, intermediate-term trend may be ready to turn lower. However, it's not quite ready yet until we get to see this 5-day moving average flatten out. The market stays below that 5-day moving average for a half hour or more, and then we start to see that pattern of lower highs and lower lows come back into the market. But clearly the market is extended in the short term, and I think the risks are definitely getting higher here for the longs.